The Brazilian tax treatment of startup reincorporations. Frequently, the share control of a Brazilian startup is transferred to a foreign company or to foreign shareholders. When it happens, we have the so-called reincorporation. Generally, the control can be transferred by a share swap agreement or by capital contribution. The adjusted basis or the book values of the shares often do not match with their fair market value. In Brazil, if the share owners were individuals or companies which have elected the presumed profits taxation regime, the legislation is not clear about the tax consequences. Thus, the Brazilian tax authority understands the transaction as a capital gain, and the difference between the share cost and its fair market value would be immediately taxed either in a share swap agreement or a capital contribution. On the other hand, if the share owners were companies under the book taxable income regime, there is a specific provision that allows the non-recognition gain until disposition of the property, as long as some accounting entries requirements are followed. However, the Brazilian tax authority interpretation lacks constitutional support. Indeed, the Brazilian Constitution establishes the event of realization to legitimate the taxation of a transaction. Unfortunately, the Brazilian Taxpayer Council, the second administrative level of tax litigation in Brazil, has been upholding the tax authority's interpretation, and this will be one more matter yet to be addressed by the judicial branch, but not in the near future. See you next time.